Welcome, everyone.
Yeah, thank you.
Have a seat. Thanks for sticking around for the last panel of the day, hopefully saving the best for last. And we're going to be talking about some of the emerging operators and companies in our space and how they're kind of differentiating from some of the established companies. Are we 20 minutes or 30 minutes for this panel?
You've got 30 minutes, actually.
It says 20 over there, so let's fix that up. Whatever you guys like. In any event, I'll just introduce the panel really quickly, then we'll jump into it. Alex Kane from Sporttrade, Joey Levy from Betr, Jeremy Levine from Underdog, Kelechi Ukah from Novig, Tomash Devenishek from Kero. And really quickly, guys, I'll just have you maybe go around and start off by explaining not so much your history as to who you are, maybe in 30 seconds or less, what it is that you do that differentiates and how your company differentiates from the incumbents. Starting with you, Alex.
I'm Alex. I'm the CEO and founder of Sporttrade. Sporttrade's a real-time trading app that combines the best of stock trading and sports betting. We're live in New Jersey, and our special sauce, Benjie, is in play. We've got an amazing in-play customer experience with no delays.
Cool. Hi, my name's Joey. I'm the founder and CEO of Betr. Betr really has two businesses, a gaming business that's differentiated by a simple, intuitive UI, UX layer, so you won't see things like -175, +5.5, because we don't think those are really interpretable for the casual fan. We're also focused on micro betting, so betting on the moments within sporting events. And then on the media side, we're building a media business that's focused on original and short form content. Co-founder Jake Paul is sort of leading the charge on that side of the business, and by many measures, we're the fastest growing sports betting media company in the United States, already passing FanDuel and DraftKings on many platforms with respect to followers and engagement, despite only going live about 6 months ago. So really excited about acquiring customers for basically low to no CAC.
Hey everyone, Jeremy Levine, one of the founders of Underdog. And at Underdog, we build games and products for the American sports bettors and consumers and fantasy players.
Hey y'all, I'm Kelechi. I'm a co-founder and CTO at Novig. We are a commission-free, high-frequency sports betting platform. We're built for bettors by bettors, and our differentiation comes from our approach to technology, namely our vertical integration of all things across the stack.
Tomash, Devenishek, CEO and founder of Kero Gaming. We're the only B2B company on this panel. We provide a technology that takes a look at the mainstream entertainment products of today and tries to bring some of the core essences of those products into the sports betting realm. And so that's instant gratification through micro betting, social, and most importantly, mindless consumption. And so we white label that technology for operators.
So, Tomash, I'll actually stick with you for the first question here. And you look at the landscape now, and we just had Adam Greenblatt from BetMGM up, and obviously they do a fantastic job. And you've got the incumbents that run their sports books and the operators, you look at them. But what do you see as missing when you look at today's landscape from the conventional operators, and what can the emerging companies be addressing? What are some of those gaps as you see it?
I think what's missing is, a lot of, I was in Boston last week for the MIT conference, and CEOs of DraftKings and FanDuel and other companies were there. And everyone talks about, we are in the, even Adam said that, we're at the early stages, right? And so if you fast forward, what is going to define the non-early stages? Well, I think it's a more mass adoption of sports betting, because today that's not what's happening. So you have companies like Joey's, who's sort of trying to trend towards that, and Jeremy, of course, sorry. But I think it's really creating products that are accessible to an average fan, because today, when we talk to a lot of operators, there's this sort of dichotomy of they want adoption, but they keep building things that amplify the experience of the pro better, right? That confident user. And so how do you attract and make the product more accessible for an average person who's never made a bet? Because that's the definition of growing this market.
Alex, I'll ask you the same question. Like, obviously you're doing something that's a little bit different from some of the incumbents, and what problem are you trying to solve that you don't think is being solved currently?
Yeah, I think it's more like, I'll share a conversation I have with some of our highest volume customers. And that is what Sporttrade's doing is collapsing the spread to buy or sell a sports bet. And when you do that, you unlock a totally new activity. And that is less going into a game and placing a bet and waiting until the end, and more where you can actually do a bit of micro betting and say, well, you know what? I think that there's going to be a hit here. I think that this team's going to score a touchdown. I think there's going to be a first down on this next play. And even the customers that we have that are very high volume, it's just they're just becoming aware that this whole new activity is being unlocked, and that is day trading a sports game, where I could say I'm going to buy here at 36%. We use a 0 to 100 probability scale because I agree that American odds is not too approachable. And the team scores a 3 and goes to 40, you can sell it. And for Sporttrade to be successful, that's what we need. So that's what we are kind of allowing customers to discover thanks to our technology and our liquidity.
Kelechi, I'd love to hear your views on that. Maybe double down on that point as it pertains to the day trading on sports and where that fits in with what your group's vision is in terms of the space.
Yeah, absolutely. I mean, look, it's we definitely have a conviction. The long run term of the sports betting marketplace is likely converging on exchange wagering. It's simply a strictly more efficient and more engaging for the end user, more profitable and more novel experience. Now, to answer the original question of where is the largest gap within the space, I think, there's a crazily underserved user segment of very high volume, very high frequency traders and bettors. And, we talk a lot at this conference in general about increasing TAM and increasing engagement. And you can think about the fact that the users who are most passionate about betting on sports in very high volumes and the sharpest bettors often ends up being the ones who are restricted, banned, limited from these books. And so, we see the gap that we need to close being, okay, we need to actually serve these institutions, these sharp bettors, these very analytical future generation bettors. The way to do so is with this exchange model that I think, technologically is more sophisticated and ultimately better off for everyone involved.
Cool. I got to say, with 5 of you up here, got to cover a lot of, got to pass the puck around. It's not that easy up here as a moderator with all 5 of you. But Joey, I'll come to you really quickly. And as you think about that question, I want to layer on top of it, who is it that you feel like you're targeting? Are you trying to take players away from DraftKings and FanDuel? Are you going after an entirely different segment of the populace altogether? Are you targeting the next generation of punters as they mature to become today's punters? How do you envision kind of the user that you're targeting as it pertains to differentiating a user experience?
Sure. So to kind of answer the last question, FanDuel and DraftKings, I believe, have around 2 to 3.5 million monthly active users. Sports betting is not legal everywhere, but they're in front of about 85 million or so gambling age sports fans. At maturity, we expect that to be about 175 million gambling age sports fans. And they've had DFS businesses that have, for the most part, had nationwide presences for about a decade or so. And I certainly don't think they have a brand awareness problem, right? I think it's, they quite literally advertise like car insurance companies, except maybe they're not as funny as some of them. But I think it's more of a product problem, right? Like, I remember when I started SimpleBet, my prior business, we started as a direct-to-consumer company and actually called the company SimpleBet because I thought the biggest product opportunity was to simplify the betting experience. I, was a fantasy sports operator and consumer before that, and I was a hardcore sports fan, and I quite literally couldn't bet on sports because I didn't understand what a -175 meant, a +5.5 spread meant. So I think the opportunity is taking that 3.5 million MAUs and bringing it to the 85 or 175 million, and that's really done in 2 ways: through superior product experience that is intuitive for somebody who's never done it before, not too dissimilar from what Robinhood did to day trading. I feel like FanDuel, DraftKings, et cetera, are kind of like the E-Trade, Fidelity, Charles Schwab's of the sports betting category, and somebody will build the Robinhood of the space, or maybe it'll be multiple companies that sort of capture different parts of the ecosystem. But then also from a distribution standpoint, building a brand that a mass market consumer isn't just aware of, but has affinity with. So for example, we launched this media company, and we've been live in Ohio for 2 months, and we estimate, and you have to extrapolate some of the data, but we estimate that around 20% of our media audience in Ohio has already converted to real money gaming in Ohio in just 2 months. And that's pretty much no CAC, right? It's a $50 sign-up bonus with a 10% margin, so it's a $45 CAC, which is orders of magnitude lower than what incumbents pay. And I think that's because we've built a brand that has a community and really resonates with a mass market mainstream consumer.
Cool. So Jeremy, you can comment on all of that as you see fit, but I want to layer on top of that for you kind of like, this is your second go around in that you launched a DFS company or a fantasy company way back. You sold that to one of the existing incumbents that's now a major player in the space. You even get your own microphone. And now your second time around, and you launched, I guess a few years back, and you're probably furthest down the track as it pertains to users and revenue today. So, how do you view that as it pertains to today's existing sportsbook experience and what you're doing to differentiate kind of relative to what these guys were saying?
Yeah, for sure. I think we share a lot of philosophies with a lot of the people on the stage. And I think there's a real opportunity to build products for the American consumer. If you look at the incumbents and their products, especially on the sports betting side, the sportsbook wasn't built for an American consumer, right? It was built to take what was offline in a smoky retail shop 20 years ago in the UK and bring it online. And that product and the architecture has fundamentally never changed since. But American consumers are really different, right? We, for the most part, didn't grow up sports betting. It hasn't been legal here. So we grew up playing games. 60 million people a year play fantasy sports in some format. There's 90 million March Madness brackets every year. We do survivor pools, pick'em pools, Super Bowl squares. We collect sports cards. There's all these different experiences we've created to express our opinions on sports. And for that reason, the consumer is very different. The sports we follow are different, right? We follow sports. I mean, in the UK and Europe, the sports mostly are continuous, right? Horse racing, rugby, soccer. There's no stop and go. In America, the sports are very stop and go. We care more about the players. Here, where overseas they're more loyal to the teams. You put all of that together, and then the place and time, right? Rather than being captive in a retail shop, we're on our phones, right? For us, over 90% of our activity on Underdog happens on mobile. So you've got a very different consumer at a different place in a different time. And the opportunity that I think everyone on stage is going after is building products specifically for that consumer, right? The incumbents have taken the sports betting experience, really the sports book, and brought it over from the UK and Europe. And for the most part, they've used the same technologies to do that. So they're not built to innovate, and they're not tailoring products to the consumer, and that's what the opportunity is going to be over the next 10 years.
Anyone else with a view as it pertains to the technology side? Because it's a fair point. Most of the, particularly you go back to PASPA repeal 2018, it was a rush to get live as quickly as you can in as many states as you can, and the solution was to use third-party technology that generally came over from Europe. And to an extent, that's still the case today, although many of the incumbents are now trying to build upon that and find solutions to work around that. So how do you view the technology development piece as it pertains to differentiating? Maybe Alex, you want to jump in on that?
I mean, I think a lot of the technology that we're going to see, I think people confuse front ends and back end technology. I think the execution of a bet is fairly commoditized thing. I think what the common thread you see on this, and I was checking out, Tomash, the front end you guys have, I think it's brilliant. I think it's amazing. It's going to speak, your front end, it speaks to me. It speaks to people that I hang out with and they look at. And I think that's where the next big innovation is going to come from. When you open up any of these incumbent apps and you see loading screens and things that lag, like that doesn't happen on Instagram. That doesn't happen on Uber. It doesn't happen on Tinder, which I know that's inspiration. And so I think that's where we have to see so much more technology and acumen come to fruition, because I look at some of these apps and go, oh my gosh, if they weren't giving me a free bet, I don't think I'd use it.
It reminds me of, I don't know if you guys have seen this, but Steve Ballmer was asked about the iPhone at some point, and he said, oh, we're not worried about it. It doesn't even have a keyboard, right? So what he was saying is, well, our main target is the pro user, is the enterprise user, right? And these guys need keyboards. And so if you have a phone that doesn't have a keyboard, we're not even worried about you. And then 3 years later, iPhone destroyed both the consumer market and the enterprise market, and so there was no BlackBerry anymore. And I think we see that again. It's the product folks that we talk to, and we're blessed to speak to a lot of folks on the product side because we talk to operators a lot. They say things to us like, well, the pros don't want to socialize. To our VIPs, this is an intimate experience, so we don't want social in our product. Yes, but the mass market consumes sports as a social product. So you have to be thinking about it not just through the lens of the pro, but through the lens of the mass. And so that, I think, is where the thoughts around technology is they're not catching up yet, although on this panel they probably are catching up.
Yeah, I think many take on this. Perhaps I'm the only technical founder on the panel, but I think we do think about technology as just being at the root of our company. Like, dare I say, we are as much a tech company as a gaming company. This manifests in our approach to our team culture, thinking about talent from Silicon Valley, Wall Street, PhD programs. There's something to be said about actually rethinking from an outside perspective, whether that's front-end technology or back-end technology. Largely, I think the industry is just simply outdated, and there's so much room for applying and leveraging things like computer vision and real-time analytics, or even language processing of in-game or pre-game commentary. And yeah, I just think that there's room for tech to be integrated into almost every single layer of the stack, whether it's a daily fantasy sports app or a sports betting exchange or even traditional sports books. But there really is just a long way to go as far as introducing new tech to an industry that is maybe a decade or so behind.
Cool. I want to shift gears a little bit and talk about customer acquisition, marketing, and obviously we're seeing a lot of the bigger players in the market spending all sorts of dollars as it pertains to marketing and working towards profitability a little further down the line. I'm just curious amongst those of you here who are operators, how you think about it. Joe, maybe I'll start with you, how you think about customer acquisition, marketing. You've only been live now for a brief period of time, but I know you have some thoughts there.
Sure. Yeah, obviously we are taking the approach of building an actual media company, right? So what I like about building a media company versus spending a bunch of money on media buys on television or radio or paying affiliates or doing things like that, or one, it's actually cheaper, but two, you develop a long-term relationship with the consumer, right? Like, if I'm paying an affiliate $400 and they'll refer a user, that user could use the product once, churn, and that's it, and I'm out my money, right? Whereas if I'm building a media company and I have millions of people across our social channels engaging with our community, that's a long-term investment. I don't even need to convert them to product right away. And I still retain value, and we plan on monetizing our media company independently. So, we're onboarding sponsors that are complementary to our brand, and the media company in and of itself that we're developing actually over time won't even cost us any money. So that's how we're approaching it, by building not just a brand with awareness, where we're raising a bunch of money and buying a bunch of commercials from, on ESPN or whatever, but building brand affinity, building a community from the ground up, led by creators, original short-form content focus. We have by far the highest ratio of original content within our media company than, Bleacher Report, House of Highlights, even Barstool, because we get to create culture rather than just repost culture.
In fairness, and not to take away anything from your accomplishments and your team, but it's easier to build a media company when your co-founder is Jake Paul than if your co-founder is Benjie Cherniak. I'll turn it to, no disrespect to me.
Well, that was a good, I think it was smart of me to partner with Jake.
Very smart of you to partner with Jake Paul, as opposed to Benjie Cherniak. Jeremy, I'll turn it to you. Like, I've seen some Underdog ads out there. I've seen some commercials. So obviously you're looking at it a little bit differently with some of the quote-unquote conventional methods. So how do you view the same thing, marketing, customer acquisition, as it pertains to your offering?
Yeah, for us, it's really holistic. I mean, there's a lot of different ways to reach customers and talk to customers. And we do a lot. Look, we do a lot on the media end. We've got our own owned and operated shows as well. But for us, really, we think about marketing through product. For us, it's about building games people want to play, and games people want to play with their friends. So our top customer acquisition source by far are our own customers. Our product's really social. And that's a number, something we track really closely. And like year over year, as we've built more product, our product gets more social. Our virality gets higher because people want to play more with their friends when they're playing a product they enjoy and they're playing games they enjoy. So it all comes back to the core thesis of product and building games people want to play.
Let's stick with that topic of social. And there's a lot of talk right now in the space of how do we combine social with iGaming, with sports betting, with casino? How do we make it more social? It's a buzzword for sure, and yet it seems to be a tough nut to crack. I'm not sure if you have any views. I know, Tomash, you might have some views there, but how do you view kind of the path to creating a social experience that builds that community?
Yeah, I mean, look, again, for us, it's really simple, but it's also really complex. It's you build a product people love and games people want to play, right? It's not, there's been over the last 10 years, there's so much buzz around gamification and loyalty rewards programs. Like, look, that's to optimize something after it's succeeding. At its core, you've got to build something people enjoy, and if they enjoy, they're going to play. And if it's social by nature, if it's something you want to share with your friends or do with your friends, our draft-based games, people draft with their friends. You guys have all played fantasy sports, I imagine. You do drafts with your friends. Shocker. You want to do that with your friends if you're offering, right? So that's what it is for us. It's about building the games that are inherently social.
As an aside, guys, like Jeremy's a team player. He can share the mic. If any of you want it, just grab it from him. I'm sure we have.
I thought it was just for me.
Tomash, over to you. I'd love to get your views on your views as to what a social experience looks like today versus what it'll look like tomorrow as we move forward.
The lens that we have is quite small, right? Because we think about micro betting. So we think purely from a post-game start and right when the game ends. We don't think pre-game or post-game, right? And I think one element about micro betting is it's almost like a slot machine, right? There are a lot of casino mechanics that are borrowed from slots and injected into a sports context because people are betting constantly, smaller bet sizes, but lots of velocity. And the key about slots is you want to keep players on device, right? You want to keep those players betting continuously. And so what we see social doing is it helps retain them, right? Because Adam, again, was saying, well, we want people to go and converse what they're used to conversing. Great, but if you've lost somebody to Twitter, now you have to reacquire them, and that's a problem. So to us, social is sort of this glue in between the curated micro bets that we deliver, because our product is curated, right? So we curate markets every 15 to 30 seconds. So what does that person do for 15 seconds? Well, they can actually socialize, because sports is an inherently social activity.
Got it. Want to talk a little bit about, because all of you are entrepreneurs who've started your companies, and the path, and there's an investor focus for this particular conference. So I'd love to talk a little bit about your journeys as it pertains to raising capital and how that's changed. Alex, I think I'll start with you. I look back to when you began, it was a different climate than it would be today, and how does that play into your strategy operationally, and what changes have you seen in that capacity as it pertains to that journey?
I think the market has corrected in the last 2 years. For us, it's pretty simple. We're either going to be successful or not, obviously. And I think the way to be successful is to deliver a product experience that no one else can do. And for us right now, that's in play. Sporttrade, at least in New Jersey, it's the only app that you can open right now. You've got to take the path over, of course, and place a $5,000 bet, doesn't matter, at zero delay. And 2 seconds later, that $5,000 is going to be worth not $5,000. It could be worth $4,994. It could be worth $6,275. And if you want to cash it out, you can do it like that. And so for us, the most important thing is engagement and retention. And we have, I think, really strong retention, upwards of 75% 90-day retention. Now, that's from our earlier customer cohorts, and they could come down over time. And that's the thing our investors focus on. And because once we crack the customer acquisition thing, and it just takes time, we're in a fragmented market, the only thing that matters is how much did it cost you to acquire a customer, and how much is that customer going to give you before they churn. And so the higher your retention is, the better. And that's one of the best things about Sporttrade. Like if you try this, you're going to stick around because there's nothing else in the market quite like it.
Kelechi, I'll come to you with that question as well, because you've got some people on the panel who they've raised capital in a fairly high-profile manner with some significant press releases, which is great. And you guys have been a little bit more below radar. So where are your thoughts on that as pertains to your journey as in raising capital and working with the investment community?
Yeah, I mean, something to think about is, we are a bit earlier stage, right? We are pre-launch, but I think our approach to fundraising has largely been influenced by the fact that we are taking this outsider disruptive approach. We are going intentionally to venture capital firms outside of the industry, names more familiar to Silicon Valley brands, and Lux Capital, Y Combinator, Paul Graham, Joe Montana, to list a few of them. And I think we've been very intentional because they're aligned with our vision of the long-term disruption and long-term vision for the industry, which is that the incumbent sportsbook model is simply untenable. And so, we are cognizant of the fact that there is this epidemic of startups, especially in the last few years, over-optimizing for growth, over-optimizing and burning money really at the cost of, okay, we'll monetize this later. And something that we're thinking about right now as we're planning our fundraising strategy is our business model is one that is most efficient and most effective at scale. And so there is just a much longer-term view that we are taking, a very maximalist view of markets within the sports betting context. And so, it may not suit every investor's risk profile or portfolio target goal that we are planning on the 10-year horizon, where we really just envision the sports betting markets look completely different than it does today. But ultimately, that's allowed us to be a bit more flexible and a bit more picky, I suppose, when we are thinking about who we want on our cap table.
Cool. Joey and Jeremy, obviously you're both very experienced in fundraising and pretty good at it, I might say. Jeremy, maybe I'll come to you. Like in today's market, even with some of the user metrics that you have, you're still not immune to the realities of where the market is and how they view, some of the challenges that are facing the public companies today. How does that impact what you guys are doing? How do you view fundraising today versus where maybe 2 years ago?
Yeah, look, 3 years ago we were selling a vision and a promise, right? Now it's about reality. And so for us, look, we've been really fortunate in that the last 2 times we went to fundraise, both times our projections, we beat them. So the forecast we told people we were going to do, we did better. And so if we're having conversations now, it's going to make those conversations a lot easier, right? I think people can see the scale and the size of the opportunity. And when you do what you say you're going to do, that's what people want to invest in.
Yeah. Joey, moving kind of to a different topic, like thinking when PASPA was repealed, I alluded to this earlier, it was a race to get live in as many states as possible for all of the operators, and it was expensive to get live in all of these states. And you coming in as kind of a newer operator now, how do you view, that you're no longer racing with the incumbents to get live from day one, or maybe you are in certain states, but how do you view the state-by-state penetration for a company like Betr, and how do you view the need to get live in what time frames, and how do you think about that?
Sure. I think it's a great market to take a very long-term perspective to how you're building both product and media. So to kind of like loop in your last question about capital raising, we raised enough capital such that we feel like we could prove out our model, right? Because we have every intention of being the category-defining consumer business in both gaming and in media. And $50 million, which is the amount of equity financing that we've raised to date, it's going to be nowhere near enough to accomplish that, right? I mean, I think FanDuel and DraftKings, for example, combined just in Ohio, just in January on their promotional spend, they spent more on promo bonuses than 3 times our entire equity financing, and that doesn't even include their paid media. So we're all about proving our model, and you could do that in a few states. You don't have to be live nationwide to accomplish that. And our model is low to no CAC, strong user engagement, and community-driven vitality. And if we're able to prove that, and 2 years from now we have the best unit economics by far in the category, which we're striving to accomplish, then we'll go out and raise a few $100 million and do it at a valuation where Jake and I still own a substantial amount of the company, because ultimately at the end of the day we're doing this to optimize value for ourselves and our shareholders. And we could do it on a less dilutive basis, and then we go nationwide. But now it's a good environment to take this long-term perspective and really gradually and methodically grow slowly to build a healthy business. That's what we're looking to do right now.
And Alex, coming back to you on a similar question, how challenging is the U.S. dynamic when you consider state by state for a product that you and Kelechi alludes to earlier works best with mass liquidity?
Yeah, I think the one thing that Sporttrade has fundamentally solved is that chicken or egg problem, Benjie. We have a primary market maker on our platform that makes Sporttrade more liquid than PointsBet, FanDuel, DraftKings, for anything you want to bet. And so we really took a page out of the kind of capital markets playbook. Memex did this, Bats did this. They partnered with market makers that made the marketplace hyper liquid. And so the Wire Act is kind of, it's better off for the market makers that the Wire Act exists, actually, because there's less natural matching of buyers and sellers. So the Wire Act going away would actually help people that wanted to place limit orders on our venue. It just necessitates the need for institutional market making, which is what we have.
And we've got 20 seconds to work with here. I'm going to give Tomash the last word. I'm going to put you on the spot. You're the only B2B. You got 4 emerging B2C companies. Which is the most intriguing to you and why?
Unfair.
Unfair.
Definitely Joey, because we're, simple bet, Kero, micro betting.
It's the Miami connection.
And it's the
Jeremy's
Miami connection,
too.
for sure. I'm very disappointed there's no better PJ going back to Miami after this conference.
We're on a startup budget.
You gotta hop on the Underdog boat back to Miami instead, I think. All right, guys, thanks very much. It was a great conversation. Thanks for staying to the end of the day, and congrats to our panel on good time.